Good afternoon. This is James Perry at Perry Capital in Miami. It's June 26th, and investors have had an awful lot of information to process in the last week or so. It started at the G7 meeting in Canada, where the Western democracies reaffirmed their solidarity against the tyrannical and ideological regimes of China, Iran, and Russia. The NATO summit just took place in Den Haag. Trump went to that as well. The NATO members reaffirmed their solidarity against those same regimes. The EU is now meeting in Brussels, and they are talking about what Europe is going to do about the tariff situation. And in between all of that, the U.S. mitigated the nuclear threat from Iran, and China and Russia noticed. Perry Capital is an independent, objective, data-driven, research-focused investment firm. Our clients know that we do our very best to separate the narrative from the facts and the rumors from reality. The way we do that is we take a look at all of the data available to us, divide it into 4 areas, and kind of find the nexus of where they all converge. The first area, of course, is market data. It's really important. We are a data-driven firm. Secondly, we look at the economy. We look at all of the data for what it's worth historically and going forward with respect to trends. Third, we look at politics, geopolitics, domestic politics and international politics, and what policy at the central bank and governmental levels are going to change the economy and the markets. And fourth, of course, and probably the most important, we'll call it the AI revolution, but it really is the transfer of the present economy to the future economy and what that means for investors and where to find opportunities to look at it. So let's start with the market data. The very foundation of Perry Capital's strategy and forecast is data-driven information. Facts, not narrative. And the facts are the S&P 500 is within a couple of ticks of its all-time high. There's reasons for that. The number one is that geopolitical tensions are falling. Global leaders are speaking. Global finance leaders are speaking. This is very, very positive. The other thing is that there's plenty of stimulus in the U.S. economy. The Fed does not need to cut. 10-year treasuries are at 4.20 today. They'd probably be at 3.20 if the senators in Washington could agree to get some cuts. They will do it. It'll be the 11th hour, probably July 4th, but the fact is spending cuts are coming and inflation expectations are falling. You can see this also in the price of oil. Oil's at $65 a barrel. Clearly, the biggest surprise of the week was that the President of the United States said it would be okay for Iran to export oil to China. Did not see that one coming, but it makes sense because it all goes through the Straits of Hormuz. Things are calming down. So interest rates are low and going lower. Inflation expectations are low or going lower, and GDP growth, expected to be 3.5% in Q2, is rising. Why? The labor force has never been larger, and it's never made more money. Wage growth is at 4.3%, unemployment's at 4.2%, and consumer spending, as usual, is driving GDP. And let's face it, the sectors that have gotten us here will be the sectors that will drive us forward. That's tech and defense. Stay overweight those sectors, belong the S&P 500, and look forward to continued returns in the stock market to be supported by the global geopolitical stability we see in front of us. I thought I would just mention a couple of things about China because it's very important and it's the second largest economy in the world. And it's a key influencer in the geopolitical sort of primacy that we see around the world. So let's talk about China for a second. And within the context of global GDP and money supply, let's just kind of get some facts out there first, okay? So global GDP is about $100 trillion. Global money supply is 108 recently, last print. So money supply is larger than GDP. That's huge. In this country, GDP is 30 trillion. Money supply officially is at 21. Unofficially, it's probably closer to 30. But anyway, no more than 1 to 1. Europe, about the same. Europe's got a GDP of 20. Money supply is about 20. In China, GDP, they say, is about 20. That includes the black market. That's probably 25%. So really, China's GDP is more like sort of 15. But the fact is, money supply in China is at $50 trillion. That's almost half of the total global supply. Why? Very simple. The Chinese real estate market has collapsed by 50%. And the money supply is mostly in the hands of the banks. So that's 350% of GDP. And with the real estate market down 50%, leverage 5 to 1, the real estate market in China is insolvent, and so are the banks. The money supply that China creates, prints money, disappears as quickly as they can print it. They don't even know what their money supply is. The fact is that, China has got a really big problem, and they have to export their way out of this because there is no domestic consumer demand. And the reality is, 95% of the oil that China needs is imported, right? That's in dollars. 40% of the food that China needs is imported. That's in dollars. That's a problem. And here's just to put a fine point on it. If you look at the last 15 years, and I always start at the bottom, the great financial crisis, right? In 15 years, China's economy grew 550%. That's amazing. That's a huge number. But over the same time period, their stock market valuation lost a third of its value, right? A third of its value. At the same time, the U.S. economy in 15 years grew at 75%, and the stock market is up something like 750% since that time, right? So there is no comparison. The Chinese economy is on the verge of collapse, and the consumers in China are suffering under massive inflation. So if the Chinese government does not keep people employed, exporting things to the States, the economy is going to collapse and the leadership will fail. If they don't keep these people employed, and the only way they can do that is subsidize it, that means prices of exported goods have to go down. It's pretty simple. China is a threat because they are so unstable, but the reality is that they've got much bigger problems than anywhere else in the world right now, and if they don't solve them, they're going to have a problem. This, I think, is probably the reason that Trump allowed Iranian oil to be exported to China. I think that's a fascinating development, and it's worth watching in the days and months and quarters ahead. Okay? Thanks a lot. Have a good weekend.